Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 2nd of December. So we start of a new month, non-farm payroll Friday today, so we're probably going to see relatively subdued movement from a lot of the majors, but we'll get into the chart to see if we're going to identify any trades for today or early into next week on the scalping front. So we'll start out here with the Aussie USD. As you can see, it's done basically everything we wanted it to do. It pulled back to a reasonable level, but it did head up to the target that we really set for it, which is the 68 cent mark. Look, it went a little bit higher. They often do overshoot. You can see we were pretty much going for the 68.50, pretty much touched it right on, and it's starting to just weaken a little bit now. But it's really more probably just testing and just finding its ground before non-farm payrolls. We're going to see generally pretty slow movement as we always do on a Friday, well, for the most part anyway. So there's no real surprise that we had a little bit of a pullback from it, but it has been a good move, and definitely got up there in a pretty timely manner. Still definitely in an uptrend, no question about that. But look, it's probably going to find itself trapped within this zone for a little bit now, depending on what the news is like. We've already had pretty good inflation news this week in terms of how the Fed has sort of broadcast what they think is going to happen and what they're going to do. So the market's already kind of reacted. So it's going to take a pretty good non-farm payroll result, I think, to actually really make the market spark from here. But it really depends on what the result is. Sometimes a good result isn't necessarily good for the market, so we really have to wait and see on that one and see how the market reacts. Quite often, the Monday is a real teller of what's going to happen after a non-farm payroll. So really, if we get a close above the 68.50 and we start to, on a daily especially, the 200 is going to be the next target, which is around the 69.20 level. You can see this level right through here, very strong support. And then really not far from that is the 70 cent mark, which seemed like an eternity away when we were all the way down here, but is fast approaching it, and look, not really showing many signs of stopping. But you've got to be mindful that the 68.50 is very strong. You can see that we had very strong support right through here and all the way through here, and again a bit of resistance, couldn't break through last time it did that as well. So just be mindful, this is a pretty strong support support zone, which is now resistance, so that role reversal is going to be pretty strong. A daily close above it though, and then we start aiming for that sort of 69 cent mark to 69.50, and then of course onto the 70 cent mark. But first and foremost, it needs to break up there. If we're weak and we start to hover around this level, more than likely the 67 is going to be the next target. So if you're going to scalp, probably in between these two zones here is where you want to be scalping and setting your scalps, especially for the next 24 hours or so. You can see here that is the best place to aim for, because that's going to be the next support zone. And any trading inside of this level, got the 20 moving average also catching it, could be significant. So this is what you want to be looking out for. A break below the 67, and then we start tracking down. But that's going to take a break below the 20 moving average, and it's got a fair bit of work to do before it does that. All right, move over to the US dollar CAD. This one's been, it's been relatively strong for the first part of the week, but hit the 50 moving average and is sold off now, finding itself above the 20. Now, the one thing about this one is it's trapped within a zone. It is trapped between two ranges really, and we've also got the 50 and the 20 moving average kind of holding it up now. For all intents and purposes, it's still trending up. We've still got a series of high highs and higher lows on a daily chart, which is significant enough. And the MACD is rising as well. So with that being said, it really comes down to a break below the 20 moving average, and then we start to target the 132 20 to 30 area, which is this zone here, the next role reversal zone. As you can see, support and resistance, that's what it was. So a break below the 20 moving average, and we start to target the 132. And of course, if we turn around, for me though, it needs to break above the 135.20 to be confident. Now, realistically, yes, it is a high low sequence, but it wouldn't want to go any lower. So if the 20 does hold it up and we get a close above the 136, so above this whole level here, and break to a new high, then we can start targeting the 137s again, which is this zone right through here. But it's got a bit of work to do on both fronts, I think. If you're going to scalp it, I wouldn't be scalping it anywhere outside of these two ranges. Probably between the 134 and the 135.20 is the first point. Like that little zone there is where you'd want to be scalping it, especially in the next 2 days or so. But if we do get a daily close below the 20 moving average, next week we'd be starting to target the 132 area here, which is the next role reversal zone. So pretty good trading on it. But again, right now it's trapped within this zone, and don't expect a lot of movement today, because more than likely to be pretty flat until we get a non-farm payroll result. All right, US dollar yen, and this one's just sold off. It's definitely in a downtrend now. There's no question about that. Has been for a while, but it's really starting to play the game now. It broke broke the support zone that we were talking about here. This roll reversal at the 139 got well and truly broken this week, as you can see, and now it's gone straight to our target, which is a 135. Well, we set it there for about 135.50. Actually, it's probably a little bit lower than it was, but it has gone down lower anyway. This is the next level that we would have expected it to go to, and it's certainly got there. It's not really showing a lot of signs of stopping either. The 200 might catch it. It hasn't touched it in a long time, but when it's coming down with a fair bit of gusto, realistically, I would expect that this probably, the level down here at 131, I know that seems like a long way away, but that's really the next proper support that's going to really hold this up. The 200 might give it a little bit of grief, but in reality, this is the next roll reversal zone. With resistance through here, support through here. That's where we're expecting it to actually get to if it continues down. Now, it's doing a series of lower highs and lower lows. No question it's in the downtrend. If it comes back and pulls up to the 20 moving average again, it looks like it's rolling over on a smaller time frame. I'd look at continuing the move down to this level here. If we do find a little bit of support at this level, which is is possible, look, there is a little bit of, as you can see, there's definitely movement here. You've got resistance and support right through there. So it is an important zone, that 135. That's why we drew it last time. But if it does bounce off this level, I would be thinking that it's probably going to pull back up to the next point, which is the 138.80. That is the area that I'd be targeting, really. If you're looking for a scalp long, wait for a small change of trend on, say, a 1 hour. If we get a series of higher highs and higher lows, start aiming for this upper band or anywhere in this zone here is probably going to be good scalping. But if we get a daily close below the 200, so below the 134, we'd be starting to target the high 131s next week. So it's been very, very technical. Although it looks like it's been selling off heavily, it has been very, very technical. So hopefully you've been able to take advantage of some of those moves, and it's hitting all of our levels. So hopefully you're able to get those too. All right, over to the dollar index, and this is broken again, very similar to the yen in the sense it's broken a very key zone now. It's played out perfectly as we would have expected it to do. Bounced up this level here, failed to make a new high, got very close to the 20 moving average and started to roll over, but now it's broken through the 105 level. So it's starting to look a little bit dire for this one. Of course, the euro is going to be the beneficiary, which we'll have a look at in a second, but as we can see, there's no real sign of this one stopping at the moment. It's lower high, lower lows all the way. And really the next level, the next serious level is going to be, I'll put a line there, the 103 sort of 50 area is the next level of support and resistance. As you can see right through there. That's the beautiful thing about when something goes up technically sound. So when it's making a series of equal higher highs and higher lows all the way up, it generally makes a good cushion for the way down as well. It makes it very easy targeting levels. And you can see that they've played out all the way down. These lines have been drawn for quite some time. As you can see, it's playing down all the way through. So it makes it very easy to place trades in the direction of the existing trend and actually have your target set with stop losses that are relatively strong. So again, now that we've broken through here, the next real target's going to be the 103. A lot is dependent on the non-farm payroll result, of course. So, if non-farm payroll is beneficial to the market, this could change around very, very quickly and keep pushing down. Or indeed, if it pushes the indices down, we could see a big change in this one and actually see it tracking up again. Once we know where we're closing on the New York close tomorrow morning, then we know where we're at on Monday morning. So we know that the theme for the week will either be going down to 103.50 or back up to that 106.50, back to the 20 moving average. Pretty straightforward. We just have to wait for which direction it closes in after the result. Okay, over to the euro. This is looking obviously super strong. Series of high highs and high lows right through, broken to a new high. No surprise there, of course, because the dollar index did the same thing. Fast approaching the 106, which is a very serious level for it. I think if you're going to scalp it, I'd probably expect a little bit of weakness or just at least a little bit of consolidation today. But when it does start to track again, the 106 is a logical target, very important zone, as you can see. Very strong resistance right through there. So I would expect that it would be resistance there again. It's still a handful of pips away though. You've still got 70 odd pips to actually get there. So if you're going to be looking at trading that, you'd want to go down to say a 1 hour and look for a series of, I'll just quickly bring that up a little bit, pullbacks to the 20 moving average. So if you get a weakness to the 20 moving average around this level here, then look at starting to track it up and push it up to the 106. But again, that's going to be very dependent on what happens in the US tonight. But that's the next logical target is definitely the 106 on the way up. For the short side, if it does fail around this level or hits the 106 and starts to reverse, the 20 moving average is the likely target. Okay, so wherever that is. Right now it's at 103.20, still quite a bit away from where it is now. And this is a daily chart, of course, so there is a fair bit of movement there. But the real target on the way down, 103.50 would be where I'd be aiming for looking for shorts. So if you keep the 103.50 and the 106 in mind, that is the zone for it. It's quite a big zone, but that can move fairly quickly on, especially after non-farm payroll. So scalp between those zones and a break of either level. I'll just bring this one across here. So price is starting to get away from it, so we need to drag it out. The 103.50 level is the bottom target, so a close below there on a daily, we start to look for shorting opportunities again, and of course a close above the 106, and then we look for the higher targets. But for now, stay within this zone. All right, last one we'll have a look at, of course, is the S&P 500 doing all the things that it needed to do. It found support on the 20 moving average this week, hit the 200, sold off that, and that, more importantly, what the 200 was there, yes, and it has been very, very strong right through, but it was backed up by a role reversal zone that was a very, very important one around that 40-30 area. You can see we had that drawn up. It sold off there, hit the 20 moving average, and then bounced up. Yes, it has been influenced by Jerome Powell's speech, of course, and news, but we are in the middle of non-farm payroll week, and that is a big move for a non-farm payroll week. So we'll see what happens now in regards to whether it's actually going to continue its strength. I wouldn't mind too much if it actually pulled back down to the 40-30. That wouldn't be a bad level. If it tracked down there and actually sat down there around the non-farm and it was a good result, you could see it definitely boosting up. The 41.50 is the really strong target for it now. If we do get a little bit of strength through this area, 41.50 is where I would likely expect it to go in the first instance. You can see it's a very, very important zone, very strong support and resistance right through there. So I've got the little blue arrow drawn there. We'll keep it there for now. But a break below the 40-30 and then we'd be starting to target the 20 moving average again. So the high 39s, that's where we would be aiming for the S&P. But just be mindful again, it is non-farm payroll, so the moves are probably going to be a little bit more subdued until the result actually comes out. So hope everyone's had a great week's trading. With all of our levels got hit from last week, so hopefully you're able to take advantage of those. Have a great weekend, and I look forward to seeing you all next week.